Hey guys, it is Friday, May 3rd, and we finally have some new good information to share with you guys about what interest rates are doing, what market conditions are, what the Fed announced on Wednesday. So we'll get you that information. There's a lot to unpack here, so we'll try and cram it into a couple of minutes. But if you have further questions, you want to know more information about it, just give me a call. Happy to talk to you about it, let you know a little bit more detail about what's going on, where we're going, and kind of what to share with your clients if you need some more information as well. But we'll give you some talking points. So we've been saying, as far as the mortgage industry has been saying, that interest rates are going to be coming down. We've been saying that for a long time here. We had lots of different reports coming out, inflation and these numbers were supposed to be coming down. They have come down. They've been stubborn. Jobs numbers, the expectation is that things were going to start looking a little bit worse on the economy and so on. We're starting to see that. So on Wednesday, of course, was Fed Day, and they announced that what we've been expecting and waiting for, that in June they're going to start cutting back on letting the treasuries roll off their balance sheet. So circle back all the way to November of 2009 when all of this started, and that's when the Treasury and Federal Reserve started buying mortgage-backed securities and treasuries, and that's what brought interest rates down to begin with. In September of 21 is when they announced that they're going to start allowing these to roll off the balance sheet because they shouldn't be having a balance sheet. They were making money on it and reinvesting and keeping interest rates artificially low for a long time, and we just got used to it. And they had to finally just, rip the Band-Aid off, and we all started to feel that pain really, really fast. Interest rates went up dramatically. They did it fast. And so here we are, okay? Their purpose there was to bring inflation down. And, well, we saw it come down significantly. Still not where they want it to be, but it's getting there, okay? So when they announced that they're going to basically go from rolling off $60 billion a month or so, down to about $25 billion a month, that helps us. That helps interest rates because basically supply and demand, you have additional supply coming to the market, the federal government's releasing all of these bonds and treasuries, and it's just flooding the market with all this extra, money that needs to be soaked up. So, there's a whole lot that goes into that, but that's what happens, okay? With that, we've been saying that when they do that, interest rates are going to start to get better. And we've seen that start. So the last 3 days, mortgage bond pricing has been really, really good. Interest rates are starting to get better. You're going to start seeing this on your pre-approval letters, on your buyer's closing disclosures and loan estimates, and you're going to start seeing it, okay? A couple things to note. So remember, things get taken away a lot faster than we get it back, okay? So interest rates, when they go up really, really fast. Now, because when we lock in an interest rate, it's a hedge on future market conditions, okay? They essentially lose money, right? So investors, secondary market, fairway mortgage companies, as we sell these loans off to secondary market to be securitized, the interest rate might be a little bit higher than what we locked in at and so on. And in an interest rate environment that is rising, well, we have to basically hedge our losses, right? So that's why interest rates go up really fast. And then coming back down the other way, it takes a little bit of time for the market to give that up. Investors will start giving that up because they're trying to kind of make up some of that room that they lost. But it will start to hit the rate sheets, and it's going to start moving interest rates in a positive way. Interest rates are going to start coming down. We've already seen that happen over the last couple of days. They've started to come down, and you're going to start to see that coming to market. And this is what we've been waiting for. The turning point was, we can put it on the calendar now, May 1st. That's the turning point of when we're going to start seeing interest rates coming down at a somewhat steady pace, I guess you could say. Nothing moves in a straight line, so they'll come down, go back up, come down, go back up. And, it's just but a trend line of lower interest rates. So this is information that your buyers need, that your sellers need. We're coming into the summer. We're going to have more houses, more people who are going to want to sell just because of the time of the year, that we're going to have people who want to buy because of, again, the time of year. But also this news is going to start hitting. Everybody and their mother's going to be, screaming from the mountaintops, hey, interest rates are coming down. And we need to be ahead of that. We need to be in contact with your buyers, with your clients, your sellers, whoever it is, your entire database. Some of you got our text message earlier about getting this information out to your buyers and your sellers to send it to your whole database in your CRM. So this is information that people have been waiting for. They want to hear it, and they're going to get it from somewhere. So hopefully it's going to be you. So We have, you know, to see how this all plays out, of course, and how long it takes for that to really hit the markets, bond pricing getting better, essentially should, move interest rates, what we've been saying, 0.5%, something like that. But it'll take a little bit of time for us to see that on the actual rate sheets, okay? So if you have any additional questions that you want to go over, you want to go into more detail about numbers, the amount that the treasury is doing, or timing, all of that, starting in June is when they're going to really implement all of this. So investors will get ahead of it, but then when they start to see it, then it'll continue a little bit more into June. So we're going to see lower interest rates, but if you have more questions, you want more details about it, give me a call. We can have a little bit more of an in-depth conversation other than just a 5-minute video for you. So if you need anything this weekend, feel free to reach out to us, shoot us a text, give us a call. We're here to help, and hope you guys have a great weekend, and we'll talk to you guys again next week.